Well, it's going to be both. I think the trade tensions will persist through the U.S. elections. I think Donald Trump does not want to let off there in terms of his pressure on China, because he believes that that plays well with at least a significant portion of his constituencies. And therefore, new trade talks won't happen until December, until after the election. And when it comes to the rates picture, there's no question that the general direction is up. We've seen it in the U.S. now. We've crossed the 3% barrier for the 10-year, and we're at 3.35 for the 30-year. That's going to go higher. We have very good data out of the U.S. Employment data tomorrow on Friday are supposed to be very positive. Yep. And under those circumstances, the Fed really has very little choice but to continue its tightening mode.
Yes, Uwe, and these expectations have already been a source of pain for the emerging markets here in Asia. If we look to the most significant, the largest emerging market, though, let's talk about China, because data out already over the weekend showing some slowdown worries for China. We haven't seen markets yet open this week. Do you think it's going to be painful for Chinese markets next week?
Well, let's see how this plays out. I think the Chinese economy is actually holding up surprisingly well. We've seen some pullback on manufacturing PMI, but that's been made up for with the services PMI, and that's what China wants. China wants to continue to change in the direction of strengthening the services industries, and is succeeding in doing so. So I think while the trade issues are weighing on sentiment for markets, they are not necessarily weighing on the Chinese economy in a way that some people had expected. That's, I think, a very positive takeaway. We're looking at Chinese fixed income rather than equities at this point as the place to invest.
Uwe, when we look at what's happening in the United States in particular, apparently Vice President Mike Pence is expected to go after the Chinese in a speech later today at a rally in the U.S. And the question, of course, going forward is this really going to make any kind of dent in the situation that we're seeing at this point? Because I think that investors have already begun to bank this in.
Yeah, I think it's about as bad as it's going to get, I think, at this point. The danger is that, we saw the other day a near collision between a Chinese and the U.S. ship in the South China Sea, and a lot of belligerent talk from people in the administration and close to the administration. If the Chinese begin to conclude that this is not only about trade, but sort of a broader political issue and strategic military issue that's involved, then, of course, I think we are in for a much more difficult situation than we had foreseen. Let's hope that that's not the case, and it bears watching what Mr. Pence has to say, and whether he speaks out on the trade issue alone or whether he is going to broaden the attack, if you will.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.